Okay, so let's talk about Microsoft. They're undergoing a pretty significant reduction in their workforce right now.
Yeah, it's definitely making headlines. We're looking at, nearly 3% of their global team?
That's right. The numbers floating around suggest about 6,000 employees are getting layoff notices.
Mm-hmm. And that makes it their largest mass layoff in over 2 years, I believe.
Exactly. The notices started going out just yesterday, Tuesday, May 13th.
Right. And, it's interesting timing. It comes as we're seeing a lot of companies, maybe over 100 large ones this month alone, making similar moves.
Yeah, across different industries too. It feels like there's a confluence of factors, the business landscape shifting, maybe potential tariffs.
And technology, definitely. Emerging tech, reshaping things, companies looking for, efficiency and better profits.
And before we dive deeper, if you find this kind of analysis valuable, do take a moment to like this and subscribe for more discussions like this one.
Absolutely. So let's put those numbers in context. Microsoft's huge. As of last June, about 228,000 employees worldwide.
Right, with a big chunk in the U.S., around 126,000 in the rest, about 102,000 international.
And these current layoffs, they're hitting close to home for Microsoft, particularly in Washington state.
Yeah, almost 2,000 notices there, about 1,985.
And a lot of those are concentrated right at the Redmond headquarters, aren't they?
They are. 1,510 in the office there, plus another 475 virtual roles based in Washington.
So it's not just one team or level. It seems quite broad across the U.S., places like LinkedIn, Xbox.
Exactly. And one of the stated goals is reducing management layers, flattening the structure a bit.
Which is interesting because it differentiates it from, say, the smaller cuts they made back in January this year. Those seemed more tied to performance reviews.
Right. This feels more structural. And it's still smaller proportionally than the big one in January 2023.
Oh, yeah. That was nearly 5% of the workforce then, about 10,000 people. That was substantial.
And, legally in the U.S., there are definitions for these things under the WARN Act based on numbers and timeframes. This certainly seems to fit the bill for a mass layoff.
Mm-hmm. Microsoft themselves have, they've acknowledged it as organizational changes.
Yeah, their spokesperson, Pete Wooten, basically said they're making changes needed to succeed in a, quote, dynamic marketplace.
Which echoes what their CFO, Amy Hood, said on the earnings call just a couple of weeks back, end of April.
Right. She talked about cost efficiencies, shifting some investments into this quarter.
And specifically mentioned building high-performing teams and increasing agility by, reducing those layers, having fewer managers.
And interestingly, despite the cost-cutting implication, she also pointed to increased operating margins. So financially,
they've been strong. The stock took a small dip yesterday, maybe 1.5% by midday.
Yeah, but overall for 2025, it's actually up around 7%. It hit its highest price this year, just the day before the announcement.
Still a bit below the all-time high from last summer, but generally positive momentum.
Absolutely. And their last quarterly revenues beat expectations. What was it, over $70 billion?
Yeah, $70.07 billion. So the underlying business performance seems robust, which makes the layoff rationale even more focused on strategy, perhaps.
And that strategy seems heavily centered on AI, doesn't it? CEO Satya Nadella talks a lot about it.
Constantly. Significant investments, bringing tech and people together responsibly. That's the message.
He used that phrase, a distillation factory for AI models, taking the big models and refining them for their products.
Right. Embedding AI into Microsoft 365, Azure, Dynamics 365, across the board.
And the scale of that investment is massive. Reports are suggesting, $80 billion in this fiscal year alone on AI efforts?
An enormous figure. And that kind of spending does raise questions, or at least observations, from analysts.
Like Illuria, who suggested that keeping up that level of AI investment might mean needing to find savings elsewhere.
Potentially including headcount, to offset things like higher depreciation from all that new AI infrastructure.
So it connects back. It's part of this wider tech trend in 2025, navigating the economy, streamlining.
We've seen it across the board. Over 53,000 tech layoffs this year already, at more than 120 companies.
And that follows huge numbers in 2024 and 2023, nearly 153,000 last year, over 264,000 the year before.
It's been a period of significant adjustment after the pandemic hiring boom.
And the human side of this is undeniable. Scott Hanselman, a VP there, posted about it being a tough day, a lot of tears.
Yeah, acknowledging the impact on people with dreams, rent to pay. It's real. And others affected have been sharing their experiences online too.
The company line remains consistent, though. organizational changes for a dynamic market, reducing redundancy, improving efficiency.
And they frame it partly as freeing up remaining employees to focus more on leveraging new technologies, presumably AI.
There's also the ripple effect, isn't there? Local businesses, like restaurants in Redmond, might feel the pinch.
Definitely. Fewer employees commuting or grabbing lunch impacts the local economy. Shantae Duckworth at Bai Tong Tai mentioned that concern.
And Microsoft is stressing, again, this isn't about individual performance.
No, it's strategic. And that point about reducing management layers keeps coming up. It's a pattern we've seen elsewhere, like at Amazon.
Right. Trying to become more agile, build those high-performing teams they talk about.
So while AI is the big strategic push, these specific cuts, especially in management, might not be a direct AI replacing manager scenario just yet.
That's what Daniel Zhao from Glassdoor suggested too. Trimming management can be more about organizational maturity after rapid growth.
Exactly. Reevaluating structure, maybe layers that built up during expansion aren't needed as much now. It's a strategic rethink.
For those affected in Washington, the official end date is set for sometime in July, it seems.
It all kind of fits that narrative of tech companies, as Corey Stale from Indeed put it, coming back to earth after that pandemic hiring spree.
Right, a recalibration. Plus, thinking longer term, maybe broader economic worries or those potential tariffs are factoring into strategic planning too.
It's likely a mix of all these things: efficiency, AI investment focus, post-pandemic adjustment, and maybe some economic caution.
So wrapping it up, Microsoft's cutting about 3%, around 6,000 roles, hitting various teams and levels, especially in Washington State.
The rationale given is organizational change for market dynamics, efficiency, and agility, strongly linked to their massive AI investments.
But it's not necessarily AI directly taking these specific jobs, more like restructuring to support that AI focus, including trimming management layers.
It's happening within a broader context of tech industry adjustments and economic uncertainty.
It certainly leaves you thinking about how these huge companies balance pushing innovation, like AI, with managing their workforce and the wider impact.
Absolutely. It's a complex equation with very real human consequences.
Well, thank you for exploring this with us today. We hope you found this breakdown useful.
If you did, please do hit that like button and subscribe so you don't miss our future discussions.
We'll be back soon. Goodbye for now.